Hey everyone, welcome back to Corporate Decoder. Today, PROCURE Space ETF filed its semi-annual shareholder report, and I'm seeing some interesting trends in its investments and performance. Quick note, this is not financial advice, just my take on public filings for educational purposes. The space industry is booming, and this report gives us a snapshot of one of the key players and how it is performing. This is a report about the PROCURE Space ETF ticker symbol. UFO it covers the 6 months ending the 30th of April 2026. They are reporting on how much money they manage, where they are investing, and how well those investments have done. Let's look at the costs for someone who invested $10,000 in the PROCURE Space ETF. The costs for these last 6 months were about $46. This might sound small, but it is about 0.78% of that $10,000 investment. It's important to remember that these fees, though small, add up over time and can eat into your investment returns. Now, how did the fund perform? As of the 30th of April 2026, the fund was managing a massive $749,259,927. That is a lot of money. They had 51 different companies or holdings in their portfolio. The portfolio turnover was 12%, meaning they bought and sold about 12% of their holdings during this period. This suggests they are not actively trading, but rather holding for the longer term, which is typical for an ETF tracking an index. So, what exactly are they investing in? The top 10 companies make up a significant portion of the fund. Labs PBC is the largest holding at 6.2%. Then we have ViaSat Inc at 5.9%, Globalstar Inc at 5.3%, Sirius XM Holdings Inc at 5.0%, and Lab Corp at 5.0%. Others in the top 10 include EchoStar Corp, Iridium Communications Incorporated, Garmin Ltd, Trimble Inc, and MDA Space Ltd. These are all companies heavily involved in the space and communications industries. Looking at the sectors, industrials make up the biggest chunk at 47.7%. Communication services is next at 34.4%, and information technology follows at 12.7%. This breakdown clearly shows the fund's focus on companies that build, launch, and operate in the space ecosystem, as well as those providing communication services, many of which are now space-enabled. Diving deeper into the specifics, the schedule of investments shows us exactly which companies they own. For example, in Canada, they have about 4.1% in aerospace and defense companies, with MDA Space Ltd being a notable holding. In France, they are investing in Thales SA and Eutelsat Communications, SACA. Shifting to South Korea, the fund holds Intellian Technologies Incorporated, which is part of the communications equipment sector, representing about 0.9% of the portfolio. The United States holds the largest portion of the fund's investments at 70.5%. Within the US, aerospace and defense is a significant focus, with holdings like Boeing Company, Lockheed Martin Corp, and RTX Corp. They also have substantial investments in communications equipment companies like ViaSat Inc and Diversified Telecommunication Services, companies such as AST SpaceMobile Inc and Iridium Communications Inc. The total value of their US holdings is a massive $528,360,690. All common stocks in the portfolio add up to a value of $743,804,704. Remember, these are the stocks they bought for $657,897,486. The difference between what they paid and what they are worth today shows the gains they have made. Interestingly, about 15.5% of the fund's assets are in investments made with money from lending out securities. This is a way for the fund to earn a little extra income. The largest part of this is in Mount Vernon Liquid Assets Portfolio, LLC. When you add up all their investments, the total is $864,840,576. This is more than the total net assets, which tells us the fund has some liabilities. Indeed, they have liabilities that exceed their other assets by about 15.4%, which amounts to over $115 million. This is common for ETFs that deal with creations and redemptions. Ultimately, the total net assets of the fund are $749,259,927, a figure we saw earlier with the key statistics. Looking at the statement of assets and liabilities, we see the investments are valued at over $864 million. On the liability side, a significant portion is the money they owe for securities they have loaned out, which is over $116 million. The statement of operations shows how the fund made and spent money. They earned over $2 million in investment income, mainly from dividends. Expenses, including advisory fees, trustees' fees, and compliance fees, were around $1.2 million, after accounting for a small fee waiver by the advisor. The net investment income was about $851,000. But the real story in the operations is the gains and losses. They had a net realized gain of about $18.6 million from investments and in-kind redemptions. On top of that, the value of their investments increased by a significant $56.1 million due to unrealized appreciation. This means the stocks they hold have gone up in value since they bought them, even if they have not sold them yet. All of this added up to a net increase in net assets of over $75 million for the period. This is a very strong performance. Comparing this period to the previous year ended the 31st of October 2025, the net increase in net assets from operations is quite a bit higher this year, at over $75 million compared to about $50 million last year. Capital transactions also show a huge increase in activity. Shares sold were over $570 million for this period, compared to $113 million last year. Shares redeemed were significantly lower this period at around $48 million compared to $44 million last year, but the difference between shares sold and shares redeemed is much larger this year. This resulted in a massive increase in net assets from capital transactions of over $521 million this period versus $68 million last year. This huge influx of capital driven by strong share purchases, combined with the investment gains, has dramatically increased the fund's net assets. It grew from about $152 million at the beginning of the period to over $749 million at the end. Now let's look at the financial highlights per S-Share. The net asset value per S-Share at the beginning of the period was $37.68, and it ended up at $51.58. That is a very solid increase. The total return for this period was a remarkable 37.22%. This is a very strong performance, especially considering the volatility mentioned in the report due to government spending and geopolitical concerns. Compare that to last year, where the total return was over 100%, which was an exceptional year. The year before that, 2024, saw a return of 24.19%. However, in 2022 and 23, the fund actually saw negative returns, with 2022 down 22.40% and 2023 down 29.94%. This shows the cyclical nature and inherent risks of investing in a sector like space. The ratio of expenses to average net assets after waivers is 0.78%. That is slightly higher than last year's 0.75%, but still very competitive for an actively managed sector ETF. All of this activity is under the umbrella of PROCURE ETF Trust II, which organized as a Delaware statutory trust back in 2017. The fund, known as UFO, aims to track the S-Network Space Index. They use generally accepted accounting principles in the United States. For valuing securities, they primarily rely on quoted prices from exchanges. For stocks traded on NASDAQ, they use the official closing price. If a security's price isn't readily available, they use fair value pricing determined by a designated person. Most of their investments, specifically common stocks, are classified as level 1 assets. This means they are valued using unadjusted quoted prices in active markets. This totals $748,598,104 in level 1 assets, with no level 2 or level 3 assets. This indicates a high degree of transparency and liquidity in their holdings. Now, let's talk about the risks. The report details quite a few. There is the aerospace and defense companies risk, which is really about their heavy reliance on government spending. Changes in defense budgets can hit these companies hard. There is also communication services risk, which involves industry competition, high costs, government rules, and the fast pace of technological change that can make older services obsolete. And of course, general equity securities risk applies. This means stock prices can be unpredictable and can drop rapidly due to company issues or broader market and economic problems. They also mention index risk. If the index provider decides to change how or when they rebalance the index, it could affect how well the ETF tracks its target, and this could hurt investors. Given that the fund invests globally, there is foreign securities risk. Markets in other countries have different rules, trading hours, and settlement dates. Liquidity can be lower than in the US, and currency fluctuations can also impact returns. A specific risk they highlight is satellite companies' concentration risk. This is because satellites can face manufacturing issues, launch failures, or even problems in orbit like signal interference. And then there is the broad space industry risk. This business is all about the future, with new companies entering the market. It is inherently riskier than more established industries, and growth can be slow with potential setbacks as new technologies emerge. Interestingly, they also include a risk related to unidentified aerial phenomena, or UAPs. They mentioned that given the recent acknowledgements of UAPs, there is a possibility they could cause interference with satellites and other space objects, which could negatively impact the fund's investments. This is definitely a unique risk factor to consider. The fund has an investment advisory agreement with PROCURE LLC, who provides investment advice and oversees operations. The advisor pays all the trust's expenses except for brokerage fees, legal costs, and other specific items. The fund pays an annual advisory fee of 0.75% of its average daily net assets to the advisor. Pensera Capital Management, LLC, is the sub-advisor, handling the day-to-day investment selection and monitoring. They receive 0.05% of the fund's average daily net assets. Looking at the Note 8 on federal income taxes, the fund's undistributed ordinary income was zero as of the 31st of October 2025. However, they had a net unrealized appreciation of over $21 million. The total distributable earnings, considering other factors, showed a deficit of about $15.3 million. The fund also had significant capital loss carryovers, with about $14.8 million in short-term losses and over $21.5 million in long-term losses. These can be used to offset future capital gains. On the tax front, for the fiscal year ending the 31st of October 2025, about 75.39% of the dividends paid by the fund were considered qualified dividend income, which can be taxed at a lower rate. The Board of Trustees reviewed and approved the investment advisory agreement. They looked at the services provided, the fees charged compared to similar funds, and the fund's performance. They noted that while the advisory fees were slightly above the median for comparable ETFs, the fund's performance, especially over the longer term, supported the fee structure. They also examined the financial stability of the advisor and sub-advisor, concluding they were capable of continuing to provide services. Overall, this report for the PROCURE Space ETF shows a fund that has performed very strongly during this reporting period, with substantial gains in its investments and a significant increase in net assets. Despite the inherent risks in the space industry, including reliance on government spending and rapid technological changes, the fund's aggressive positioning seems to have paid off. The significant capital inflow suggests investor confidence is high. However, the negative returns in past years are a stark reminder of the sector's volatility, and investors should remain aware of the numerous risks detailed in the filing. The board's approval of the advisory contracts indicates a confidence in the current management and strategy. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord for more.